Thank you, Margaret. Good morning and a warm welcome to our fourth quarter and FY18 earnings call. I am Krishna Kiran from the Aurobindo Pharma Investor Relations. We hope you have received the Q4 and FY18 financials and the press release that were sent out yesterday. These are also available on our website. With me, we have our senior management team represented by Mr. T.V. Ramprasad Reddy, Executive Chairman, Aurobindo Pharma USA, Mr. N. Govindarajan, Managing Director, Mr. Sanjeev Dani, COO, Head Formulation, and Mr. Santanam Subramanian, CFO. We will begin the call with summary highlights from the management, followed by an interactive Q&A session. Please note that some of the matters we will discuss today are forward-looking, including and without limitation statements relating to the implementation of strategic actions and other information on our future business development, and commercial performance. While these forward-looking statements exemplify our judgment and future expectations concerning the development of our business, a number of risks, uncertainties, and other important factors may cause actual developments and results to differ materially from our expectations. Aurobindo Pharma undertakes no obligation to publicly revise any forward-looking statement to reflect future events or circumstances. And with that, I'll hand over the call to Mr. Govindarajan for the highlights. Over to you, sir.
Thank you, Krishna. Good morning, everyone. We are here to discuss the fourth quarter and financial year 17-18 results declared by the company. For the year, the company clocked a revenue of 16,500 crores, an increase of 9% over last year. The growth was driven by healthy growth in US, Europe, and growth markets. The EBITDA before forex and other income increased by 10% year-on-year to 3,789 crores, and net profit increased by 5% year-on-year to 2,423 crores. In Q4 FY17-18, overall revenue increased by 11% year-on-year to 4,049 crores. The EBITDA before forex and other income increased by 11% year-on-year to 804 crores. Net profit declined by 1% year-on-year to 529 crores. In terms of the business breakdown, formulation business contributed 82% of the revenues in FY17-18. The formulation revenues for the year stands at 13,533 crores, registering a 12% growth year-on-year, and for the quarter stands at 3,249 crores, an increase of 13% year-on-year. API revenues for the year were at 2,962 crores, and for the quarter were at 800 crores, a growth of 5% year-on-year. In the formulation business, the US market revenue stood at 7,442 crores for the year, an increase of 9% year-on-year. In dollar terms, US revenues witnessed a growth of 13% year-on-year basis to $1.15 billion. For the quarter, the US revenues witnessed a growth of 5.8% year-on-year at 1,739 crores. In dollar terms, the US revenue grew by 10.1% year-on-year to $271 million. The growth was primarily driven by new product launches and improved volumes of existing products. We have filed 11 ANDAs and launched 7 products in the quarter under review. We have received final approval for 10 ANDAs during the quarter. Year as a whole, we had received 49 final approvals. Aurobindo USA, the company marketing oral products in USA, has witnessed a growth of 18% year-on-year in FY17-18. For the quarter, the growth was at 21% year-on-year. Auromedics, the injectable business, clocked a growth of 4% year-on-year to $164 million in FY17-18. For the quarter, the revenue declined by 16% to $35 million, majorly on the back of product recalls and stoppage of the bag line. We have filed a total of 90 injectable ANDAs as on 31st March 2018, out of which 57 have received approval, including 2 tentative approvals, and the balance 33 are under review. Auro Health, our OTC business in the US, has started picking up with new product launches. The company, as on 31st March 2018, has filed 478 ANDAs on a cumulative basis, out of which 327 have final approval and 34 having tentative approvals, including 11 ANDAs which are tentatively approved under PEP4, and the balance 117 ANDAs are under review. The unit-wise filing and approvals are as follows. From Unit 3, 126 filed, 108 approved. Unit 7, 160 filed, 117 approved. Aurolife 27 filed 17 approved. Unit 4 90 filed 50 approved. Unit 12 20 filed 19 approved. Unit 6 11 filed and approved. Auronix 2 filed and 1 approved. Unit 10 25 filed and UGR 13 products have been filed. Unit 3 7, Unit 10 and Aurolife manufactures oral non-beta-lactam products. Unit 4 manufactures general injectables and ophthalmic products. Unit 6 and Unit 12 manufactures cephalosporin and semi-synthetic penicillin respectively. UGR manufactures oncology and hormonal products, and Auronix, which has its facility in Bhiwadi, Rajasthan, manufactures penem injectable products. Europe formulation revenues clocked at 4,354 crores in FY17-18, an increase of 32.9% growth over last year. On a constant currency basis, the EU revenues grew by 29%. For the quarter, Europe formulation revenues clocked at 1,152 crores, registering a growth of 48% year-on-year. On a constant currency basis, the EU revenues grew by 34%. As on 31st March 2018, we have transferred manufacturing of 83 products from Europe to India. Growth markets witnessed a growth of 18.7% year-on-year to 897.1 crores in FY17-18. On a constant currency basis, growth markets recorded a growth of 23%. For the quarter, growth markets grew by 6.4% year-on-year basis at 210 crores. On a constant currency basis, growth markets recorded a growth of 11%. ARV formulations revenue were at 840 crores, declined by 29% year-on-year in FY17-18. On a constant currency basis, ARV revenues witnessed a decline of 26%. For the quarter, ARV revenues declined by 43% year-on-year to 149 crores due to increase in pricing pressure in one of the key products and reduction in the tenders floated by various countries. In terms of segmental classification, US formulations contributed 43% of the overall revenues in Q4 FY17-18 versus 45% in Q4 FY16-17. Share of EU formulations increased to 28% in Q4 FY17-18 versus 21% in Q4 FY16-17. Growth market share remained at 5% in Q4 FY17 versus Q4 FY16-17. ARV segment represents 4% of the overall revenues in Q4 17-18 versus 7% in Q4 FY16-17. API business contributed 20% of the total revenues in Q4 FY17-18 versus 21% in Q4 FY16-17. R&D expenses is at 187 crores during the quarter, which is 4.6% of the revenues. Net capex for the quarter is around $70 million. The effective tax rate for the quarter is 18.8% of PBT. The closing rupee versus US dollar rate was 65.175 in March 2018 and rupee 63.875 in December 2017. The net debt as on 31st March 2018 was at $538 million against $540 million as on 31st December 2017. Further reduction did not happen due to increased inventory to improve the service levels and increased capital expenditure during the quarter. We also paid a dividend including tax of $10 million, and the majority of the company's debt is denominated in foreign currency. The cash and bank balance is at $194 million. The average finance cost is at 2%, mainly due to availing multiple foreign currency loans. This is all from our end, and we are happy to take your questions now.
So should we open it for Q&A now?
Many people are coming. Go ahead.
So we'll open it for Q&A now?
Please.
Sure. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset mode while asking your question. Anyone who wishes to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you for taking my question, sir. First, on the U.S. business, what exactly happened in the injectable, business this quarter? Because when we spoke in Feb, in the last conference call, the management was very confident of achieving the sort of 40-50% year-on-year growth. So, and how do you look at FY19 because of the pending inspection of pending issues from the inspection and the recalls that we've seen again recently?
So when you say pending issues from inspection, Neha?
Unit 4, I don't think we've still got an EIR there, right?
So we have received our EIR last weekend, Neha.
Okay, so then how should we look at FY19?
So I'd like to just answer the first part of the question so that we can get into the subsequent period. And subsequent to the discussion we had in the last quarter call, and there are a few more recalls, and in fact, we also had to completely pull out the bag line, which is not the case at the earlier part of it. So those are changes which have happened. So obviously, I think we are consciously looking at those aspects of it in terms of the future as well. In fact, we are also investing heavily in terms of our resources to enhance the quality aspects in injectables specifically. So that is something which is very clear in terms of, I think, the injectable numbers being down because of those recalls and the stoppage of Babylon clearly. That is the change which has happened. So as far as FY19 is concerned, our objective is very clear that we would like to grow, and that we have received some clarity now, and also we would like to put our resources in terms of enhancing the quality aspects. We will have complete clarity as we progress over the next, let's say, few days to by next quarter, we'll have complete clarity in terms of how the year is going to pan out.
So, there's the initial guidance that we'd given of growing double digit that will definitely come down as we invest more, probably see more stoppages to ensure that there is no, issues with quality.
So I would put it this way, it is not the question of, purely on the timelines of investment, and timelines are the investments we are talking about. What we are talking about currently is in terms of we will have better clarity as we progress. It is a question of ensuring that once we start, we should be able to produce it on a sustainable basis is what we are looking at it. Our objective is still to grow clearly, Neha. So it is too premature to comment either way at this junction. Okay.
And my second question is on the net debt number. You mentioned that we weren't able to achieve our guidance of it being less than $475 million because of higher capex and higher inventory levels to improve service. Is this, the higher inventory level to improve, is that something new which has happened in the quarter which we didn't know about, or is it related to certain product launches or product approvals that we were expecting in the first quarter?
Yeah, Subbu is going to answer that, Neha.
Yeah. See, this quarter the service, we have increased the inventory to improve the service level because the forex, the exchange rate also was going up. So we want to take advantage of it to get some strategic inventory by which we will be able to gain in the future. That is one of the reasons. As Govinda said, we have already incurred a capex of around 70 million during the quarter. Apart from that, we have also paid a dividend of 10 million. So because of these reasons, I would say this is a very temporary, this one. It's not that there is a setback or anything.
And how should we look at FY19 debt, sir?
FY19, sir, we are, because we believe the next year, the level of inventory which has gone up this year will not happen. So we are at this stage, we are very clear we will be able to reduce the inventory by about, reduce the debt by about 100 million at least.
Okay.
No, Subbu. You see, we have taken a decision to make compulsorily the raw material and excipients inventories minimum compulsory 3 months, and also the finished products also at subsidiary and compulsorily 3 months.
Yeah.
That exactly has not happened, but the increase in the inventory is happening last 4 months. And we almost reached majority of the products. Maybe here and there small amount will happen, balanced products. Previous we have 1.5 months to around 2 months somewhere. So that's where we are filling the gaps in. Because of small one product shortage is making a big penalty. So we want to avoid the situation and making this issues.
Over and above that, Neha, just to add to whatever Mr. Reddy and Subbu said, please understand the fact that if you have seen the particular numbers, the growth has also happened from the existing products in terms of the volume. That is predominantly we are seeing that there are NDOs which are coming up, and in case if you need to confidently participate in the NDOs, it is better to maintain some level of inventory before even you participate in NDO rather than every time taking an order and start thinking about producing it.
Okay. Fine. Thank you so much, sir. Thanks for taking my questions.
Thank you. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Hi. Good morning. Thank you for taking my question. First is on the ARV business. I think you made a opening remark, and also related, what's happening there is the pricing pressure that you talked about. Can you elaborate that? And can you also give us some color on the DTG product? I thought it was starting to start off from the 1st of April or something. Can you clarify that?
Yeah. As far as DTG is concerned, let me start with something positive. As far as DTG combination is concerned, definitely, I think there are more orders which are flowing in our way. And in fact, anticipating the combination of TLD, we are also working towards expanding the capacity of both tenofovir and lamivudine in terms of the API as well. So clearly, the shifts on TLD, you will start seeing from this year. It may not be in the first quarter, but definitely starting from second quarter, you will start seeing that shift. And obviously, till we have that shift, the existing products would be under pressure, as we had mentioned in the past, and that's what we talked about, the pressure on the TLE aspects of it, which is governed that bringing down the number.
So, what about can you also talk a little bit about the US price erosion, please? I think we have guided in the past about 8 to 10% kind of a level. Have we seen something change on the US pricing? This could be on the industry as well. Any color there?
Okay. You're talking about the US price erosion. As far as year-on-year is concerned, it's around 8% in terms of I think last year to this year. Even though I think we are clearly seeing that the directions are definitely changing, because if you see sequentially, the erosion is only 1%. And clearly, as we move forward, we expect that to be getting normalized, because generally in the past also, generics used to have around 5% erosion. You can take it as that as a new norm is what we are expecting it to be. There can always be changes in terms of plus or minus 1 or 2%, which can happen in terms of I think 1 or 2 quarters. But then on long term, I think we believe it should settle at 5% is our belief.
Okay.
Last year, we have around 15% on base products. We are telling overall products.
So we work with these products.
Maybe.
Yeah. So we are talking about base products that you see. Obviously, there that it would be excluding products with development. That's the reason I'm talking about I think the 8% amount. Yeah.
Last question here. EIR that you mentioned for Unit 4, we've seen certain peers, despite getting an EIR, there are pending issues as well. Do you think in your case, it is all clear and you'll start getting approvals from Unit 4?
When I talked about that we are investing our resources to enhance the quality aspects, I'm not only restricting it to Unit 4, I'm talking about the entire injectable portfolio of all the 3 units, Shyam. So that is what I talked about, because we would like to ensure. So in fact, if you remember, there have been certain recalls in terms of Unit 16 as well. So we have invested in terms of certain enhanced X-ray missions and improved our inspection effectiveness, etc., etc. So overall, we are talking about ensuring that I think we would like to be ahead of the curve in terms of meeting the particular standards or even better than the particular standards. That's what we are working towards. As far as Unit 4 EAR is concerned, we have received it probably 48 hours or 70 hours back, Shyam. I think so we will have much better clarity as we start getting some product approvals as well.
Okay. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah. Hi. Govind, can you provide some clarity on the comment on the injectable sales? How much of the decline sequentially was driven by product recall and stoppage backline? Because we almost lost about $11 million sales sequentially.
Almost 60-70% of that is because of that, Anubhav.
So you mentioned 60 to 70% is because of this.
Yeah.
And when do you expect this?
Either recalls or slowed down some products.
Like example, backline
because of these recalls, something? Yeah.
It's a combination, sir. Yeah.
A combination.
And when do you, sir, expect to restart the backline?
You should take it from third quarter. From a financial year, it should be somewhere around September, October time when you can take it safely, Anubhav.
September, October, okay. And what about, so this was about the backline, but for the products where you slowed down and now you have the clearance as well. So for the other products where you slowed down, when the ramp-up should happen, or this is the new base for us?
No, I think I'll put it this way, like we had slowed down on even products like ampicillin or peptides for some time, and those are back on track. And octocillin as well as napsylin also is getting back on track is what I would say. So I'm not saying that this is a new base. What I only commented is in terms of the overall year, we need some more time to clearly talk about the directional number. That's what I talked about.
Okay. And just on injectables, when do you still expect AUROPHARMA approval for us?
There is nothing pending from our end. In fact, actually, a week or two back, we heard that our DMF got cleared, and if there are no further queries, which hopefully should not be there, I think we should get approval at some point of time in the next few days to few weeks, Anubhav.
And you're already ready for launch? Whenever you get approval, have you already shipped it?
So whenever we get approval, within a couple of weeks, actually, I think we should be capable of launching is our belief. Because this one tricky thing here you have to remember, Anubhav, this product is a sensitive product and it has to be cold storage in terms of at API level. So we are also cautiously approaching this.
Okay, that's helpful. Second question was that you talked about the inventory increase. Now, inventory increase is really sharp. It's almost $100 million increase over the last 6 months. So is this largely driven by US? Because $100 million inventory increase is you are targeting a sales increase of almost $300-400 million at least. So in that respect, $100 million increase looks very, very sharp increase.
So would you like to comment, sir?
Yeah, the increase is not ended with this 100 million because we have across the table 60-70% US and 20-30%, especially in the tender countries in Europe, and we want to maintain between 3 to 3.5 months and as a policy, and that resulted in a lot of products is whatever we are maintaining 1.5-2 months, other than the sea shipment timing, so it has to be, now we covered majority 70-75%. Maybe some more may happen in next 1 quarter.
Sir, just as a benchmark, now it is 3.5 months. What was it earlier, your inventory level that you were benchmarking?
It is not the inventory. Basically, we want the raw material and equipment, everything at our factory end, and we want the inventory at our subsidiary end. What we have not increased is our sales. Our sales is more or less is the same. There is no much difference. Where is the difference is inventory on the subsidiary stocks as well as our plant stocks.
So, Anubhav, I also would like to add to whatever Mr. Reddy said. So, we had built up some inventory and suddenly there was a bump up of some NBOs and those inventory immediately got consumed. So, what happens is I think you need to build it up again to a level where those minor order income would not, incoming should not disturb the entire inventory. Is also one more angle you need to look at, Anubhav.
So, sorry, I got a little confused here. So is this a change in, so what Mr. Reddy was explaining looks like it's change of, let's say, whatever inventory you want to keep, it's a change of level for us, and it seems like a permanent change for us. What don't you seem to suggest it's more like a temporary thing and inventory levels will...
I'm not saying that. You asked a question, what is the earlier policy? Earlier also we are trying to build it, Anubhav, but that got consumed is what I was trying to explain.
Okay. So, but what triggered all this? Was there a big penalty that we had to face? What triggered all this?
There are two things. One is in terms of to avoid penalties, and the other is also to ensure that we are able to cash in terms of those NDOs which can come in, Anubhav. New business opportunities when we say NDOs.
Okay.
Last 2 months we got 70-80 million new business. Something on the base products. All these things it is possible only if you have stock. That is possible. Otherwise, you will never get any business from the base products.
But have that number shown up, sir, in sales as yet, or it's yet to show up? Because the sales are pretty...
Yearly basis, I am telling you.
Okay. Just for one clarity on top level Excel, when do you expect that approval? Near term, or will it happen end of this year?
So as far as Qtr4 is concerned, I think we have submitted a response in February 2018, and I think we should, in case if there are no further queries, we can expect it around October timeline, Anubhav. And obviously that will in case if there are further queries.
Which product you want?
Qtr4 also.
Okay. Thank you very much, sir.
Thank you. The next question is from the line of Ranjit Kapadia from Centrum Broking. Please go ahead.
Thanks for taking my question. My first question related to, can you elaborate the OTC business, what is the latest update? And my second question is related to injectable business. What is the remedial measure and recall cost for all this, which has happened in the recent past?
Ranjit, I may not have a specific number to that currently in terms of the remediation measure in terms of cost, because it is still work in progress is what I would say. I think we'll have to, as soon as we get clarity, we'll provide that particular detail. As far as our health is concerned, clearly I think this year is going to be, as we had explained earlier also, this year is going to be a good year, and once already we have those two products which we had launched last year is also doing well, plus we should get the omeprazole by September, June.
June, July.
June end or July beginning is what.
Present our sale around 35 to 40 million, which maybe we are expecting 25% growth. So let us see what will happen.
And how many products are planning to be launched in the OTC segment in the current FY19? Besides this omeprazole?
Around another 12 to 14 products.
20 to 30 products.
12 to 14 products.
12 to 14 products.
12 to 14 products. Okay. Thank you so much and wish you all the very best.
Thanks, Anita.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants, we would request you to limit your question to 2 at a time. Time permitting, you may come back for follow-up questions. Thank you. The next question is from the line of Kartik Mehta from Deutsche Bank. Please go ahead.
Yeah, hi. I want to know if you could give a guidance for the US sales FY19, FY20 in terms of the launch, and in case of injectables, contribution from unit to 16, will it start in the second half, or how should we look at it?
Unit 16 is already supplying to US market, Kartik.
Okay.
As far as we don't give any guidance per se, except that we can tell you definitely we should be growing.
No, so the reason I ask this is that the quarterly US sales number at 271 is almost maybe near to the pre-Renvela number that we had of 263. So if for us an exclusivity or a product with low competition, we are able to see higher sales for the next 3-4 months if we need to grow, do you believe we have products which we will be able to grow by low double digit for the US sales in FY19, and 2 also in terms of the profitability, because all the regular ones will not have the contribution which we would have seen for Renvela in the early days. Thanks.
As far as the new product approvals are concerned, even though I think we can look at certain products as starts, and it is important for us to wait and see that emerging rather than committing any number on that, Kartik. And when we talk about growth, it's not purely depending on the new product only. It's a combination of new product as well as the volume growth. As you would have heard Mr. Reddy talking about the opportunities in NBOs. And typically, Mr. Reddy can also comment on this. Typically, these NBOs pricing would be relatively better than the normal pricing, sir?
Yeah, definitely. Nowadays on this product, we are not prices are definitely better than last year, last few quarters prices.
And on the R&D cost, sir, will this remain at this levels for the quarter? It was higher, and if yes, how much should we build it?
No, I think we have talked about around 5%, if you remember, Kartik, in the past also. I think FY20 is when we have to watch out for, because at this juncture we have complete clarity in terms of having a phase 3 for one molecule of biosimilars, and then we are also working on another product. In fact, it is a positive one in case if both the phase 3s happen in that year, then the particular percentage can go up to 8-9%, if you remember what we talked about. So I think definitely one product would kick in. I think the second product also our folks are working hard on that. Then if both happen, then the R&D cost on that particular can go up.
Okay. Thank you. Yeah.
Actually, it is positive is what I would say, because we are expecting to do only one. The subsequent product has now got advanced.
Okay. Thank you.
Thanks, Karthik.
Thank you. The next question from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Hi, thanks for taking the question. Going on the European business, we've done exceptionally well this year. So apart from the Generis acquisition, what have been the organic growth in this business? And I mean, how do you see this business now going forward?
Yeah, I'll answer that. If you see the constant currency basis, we have grown by 33%, but without Generis also, we have grown at 15% on a whole year basis. So actually, this growth has continued in quarter 4 at 17% without Generis. Long term, we have always maintained that actually markets are growing between 0 to 5%. So at a constant currency basis, we'll grow at about 8 to 10% because we are a mid-level player, and I think we can grow double of the market growth rate.
And on Europe now going forward, do you see opportunities for further addition to the portfolio or to geography through inorganic growth, or you will look to largely grow this portfolio through organically only going forward?
It will be a combination of strategy of both. But we have a number of products under development. As you know, more than 200 products are under development. In fact, during the year, we launched 2 major day one launches also. Even though in Europe, the day one sale is much different than in US because there are at a time 8 to 10 competitors like rosuvastatin and ezetimibe, but that kind of launches will continue.
And lastly, how do you see the profitability on this business going forward? I mean, how on a sustained basis?
It is in double digit of EBITDA margins, and we think we will be able to maintain that.
Thanks.
Thank you. The next question from the line of Chirag Dagli from HDFC Asset Management. Please go ahead.
Yeah, so thank you for the opportunity. Sir, what is our China import, as a percentage of the overall import? How much do we import from China, sir?
It would be to the extent of almost 400 million, Chirag, whatever last number I had looked at. From the value perspective, I can talk about that.
Okay, sir. And sir, the customer consolidation, the last of the 3 big, the last of the consolidation, has that sort of got baked into current prices in a sense? Have renegotiations happened, new contracts been signed, etc.?
So far, there has not been material impact, Chirag, I would say. I think as we move forward, we'll see, but as of now, I think there is no material impact.
But the those customers have now there are 3 big customers. They're buying as 3 big customers. That understanding is correct, sir?
There is no further any consolidation last few months. Right Aid, Mecassin one, that it will go from Mecassin and it will join somewhere in other source. So virtually there is no much change in the position last 3 months to next 6 months as far as our way of thinking, our understanding of this business.
Right. Okay, sir. And the last question on the US is, in terms of number of launches for this year and the next, how are you thinking about the number of product launches?
Around 30 to 40 products.
Of these, most of these, how many of these are already approved, sir?
At least 10 are already approved.
Okay, sir. Thank you so much.
Launchable products.
Thank you so much.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah. Thanks for this opportunity. Sir, I just missed the injectable number for the full year. If you can share that, what is the injectable number for US and also for the quarter?
So it was 154 for the full year and 35 million for the last quarter.
Okay. Thanks. And now on the margin front, sir, for the European business, you have so anything that you can share that, okay, what is the kind of margin level that we have achieved now for the entire consolidated European operation now?
our European operations profitability in terms of EBITDA is about, in a double-digit percentage.
Okay. So from the earlier acquisitions, negative margin profile to positive, and now what level that we have progressed and what is the kind of scope of further expansion? That is what I wanted to have some sense. So if you can talk on that.
Looking for a balanced growth, so there will be some high profit margin products as well as top line portfolio fillers. So I think we will be able to. Our focus is on balancing both the sides, but definitely on improving profit little faster than the sales.
Okay. If you can share what is the utilization level at the plants level, sir? The injectable and the formulation orals separately put together.
I think the orals, as far as Unit 7 is concerned, it is already running at an optimal level, and Unit 10, as you would appreciate, is only start now. So obviously, it is very premature to talk about capacity utilization there. And so that is where we stand as far as oral is concerned. As far as injectable is concerned, 12 is at optimal level and 16 is also catching up. And Unit 4, we need some more time to that capacity to get consolidated, because as we have talked about defending the bag line for some time, restarting also we have given you the time. And so at this juncture, again, it is better to get that online to talk about capacity utilization.
Okay. Yeah. Just one last question on the orals, US oral formulation business. So that has been one of consistently it isn't growing despite the market challenges and all. So what is the visibility one should have from here, having the base of
projections? Surya, I think we can only talk. We can say that it should continue to grow is what we would say. We are not giving any specific projections per se.
Yeah, correct. But seeing that price erosion challenges and all that, so what is the kind of a visibility that we are having for the oral business, sir?
So even on the Even in the oral business, I think we talked about, while even that means as far as the future is concerned, we talked that we are considering a 5% erosion as a normal erosion, which used to be there in the generic business in the past as well. Give or take 1% here and there. Having said that, apart from the erosion, we also have opportunity. One is in terms of the new product launches, and also the growth in terms of the existing base business as well, which could ensure that even beyond this, the growth would be able to, you'll be able to maintain the growth is our belief, Surya.
Any other question, Mr. Patra?
No.
Thank you. Ladies and gentlemen, please limit your question to 2 at a time. The next question is from the line of Chirag Dagli from HDFC Asset Management. Please go ahead.
Yes, sir. Thank you for the follow-up. Sir, API profitability, how has it changed over the last couple of quarters, given whatever is happening in China in terms of intermediate pricing? For our API business, how has profitability changed?
I think, as you would appreciate, currently, whatever Chinese intermediate prices which has gone, you are talking about Chinese API or are you talking about Chinese API? Intermediate you are talking about?
Intermediate, sir. Pricing hasn't changed.
Yeah. So the intermediate pricing, when you are talking about in antibiotic sector, I would say, I think we have no other way except to pass it on to the customer. To that extent, I think it would not be hurting us. But in the non-beta-lactam business is concerned, majority of non-beta-lactam business is to Aurobindo only in terms of I think the regulated market, and that is going on a standard costing CS4 method of cost plus 10% level. But definitely I think it is a bit of concern at this juncture. So we are also working towards securing whatever sources we are having in China. We are also looking at alternatives wherever possible to have an Indian source as well. But there are some concerns on that area, and we are working towards mitigating that as well, is what I would say, Chirag.
Okay, sir. And sir, on the ARV business, this quarterly run rate on the formulation side, is this what we should sort of now assume is the new normal, given that whatever has happened has happened because of pricing?
Not at all. As I was talking about, this year should be I think the year where we can see the TLD making some inroads and we can start. This year will be definitely better than last year as a whole. but that reflection would not happen as quarterly in terms of the first quarter. You would start seeing that particular improvement from the second quarter is what I said, Chirag.
So the full year number plus DTG, whatever you are expecting, that is how you are thinking about this.
Full year number, and including DTG to say, would be better than the last year.
All right. Thank you so much.
You're welcome, Chirag.
Thank you. The next question is from the line of Surjit Pal from Prabhudas Lilladher. Please go ahead. Surjit Pal, your line is in the talk mode. Can you please go ahead with your question? Due to no response, we'll move to our next question, which is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Just one clarification on the status of the two facilities. You mentioned Unit 4 has got EIR. What's the status of Unit 12, sir?
Unit 12, we received the EIR as well, Prakash.
4 and 12, both are cleared now, you're saying? Yes. So of the 30 to 40 launches, what is the expectation from Unit 4, sir?
We are not given specific number on that at this juncture, Prakash.
Okay. And second question, again, a clarification. You mentioned about 8% kind of price erosion. I think sir also mentioned about 15%, and then you mentioned ex-Revlimid. So I got a little confused.
No, what is from a base business angle, year on year it is 8% erosion. On a sequential basis, it is only 1% erosion is what we said. When Mr. Reddy was trying to say about the overall number, I said we are talking about only the base number, which is where we don't consider Revlimid. So is it clear to you, Prakash, now?
Yeah, okay. With Revlimid, it is 15% because Revlimid would be a much higher number.
It cannot be considered as a base business at all, Prakash.
Okay. And you are expecting so basically you expect this is normalizing now, and you also putting up more inventory as you see more business. So I'm trying to understand the volume growth that we achieved for the year and what is the expectation going forward?
Again, we are not giving any specific projection against the volume growth. Overall, we are still maintaining that we would be able to grow, Prakash.
Okay. And lastly, on the employee expense side, has there been additional facilities which is being commissioned or so which has led to increase in employee expense, or how should we look at it also going ahead?
Yes, Subodh will be able to explain that, Prakash.
Within last quarter, no, there is no increase in the new facilities or anything because the last facility which has been commissioned was in June 2017. The increase between last quarter to this quarter is the annual incentive which has been given to certain set of people.
Understood. Great. And lastly, on the ROW, sir, what has really happened? We used to grow 20% plus. Growth is little softened, and how should we look going forward?
I think our long-term outlook remains the same, stable 15 to 20%. But this quarter in Latin America, particularly Brazil and some parts of Northeast Africa, we had regrowth. But overall, like South Africa, Canada, and all other markets have grown quite healthily.
Okay, thanks. I'll join with it.
Thank you. The next question is from the line of Surjit Pal from Prabhudas Lilladher. Please go ahead.
Madam, can I request you to ensure that those first people who are waiting on the line being given an opportunity rather than repeat calls, please?
Yes, sure, sir. Yeah, thank you.
Yeah. Good morning, Govind.
Good morning, Surjit.
Hi. It is about, the strategic view of Aurobindo in the next 3 to 5 years when, people are leaving space despite that there is a lot of competition. That is one. Second is that, there will be a lot of specialty business. People will be jumping and there is assurity of success is very much questionable at this point of time. Do you think the growth in outside US is one of the key focus for next 3 to 5 years for Aurobindo? I mean, other than Europe?
I think I'll answer you this way, that I think we would like to grow across, and obviously, I think there is a conscious decision which was taken even 4 years back that we would not like to depend on only one market. That's where the movement towards Europe, and that has really played out well. So our objective is to grow across, and we will also like to ensure that we are spread well geographically. So today, US and Europe together is 67%. In fact, with Europe also growing well, it can be even better. So that's the objective rather than saying one against the other, Surjit.
Okay. Because the point is that we haven't seen much of your activities in terms of acquisition or growth in ROW market. So I was just thinking, whether are you guys really focused to grow into that to offset the kind of competition we are seeing in US?
No, I think I would answer it this way. We keep evaluating, but every acquisition would be based on its own merit rather than put one against the other. That's how I would say. Right now, whatever acquisition which has happened has been attractive in that specific geography. So because of which we had gone ahead with that. Moving forward, you know about the strategy which has been clearly spelled out. The Sanjay has been looking out for some opportunity which can happen in the Eastern Europe, which would also make the Europe as a continent complete in terms of future requirements. So any other opportunity, we will be considering it based on its own merits, and we'll take a call.
Sure. Subbu, I have a question on your overhead charges. If I look into Q1 and Q4, in between all those, your SG expenses, excluding R&D, it has been, in second quarter, it has been told us that 170 crore roughly around will be one-off. And from 685, kind of, that has been increased by roughly around 150 crore if I go by Q4. So, what could be the reason? Is it because of penalty you guys are paying for that, or what could be the reason for SG expenses gone up so drastically?
There is if you recollect, we said in the second quarter, the overheads will be anywhere between 925 to 975, right? I'm just trying to recollect what has been said at the time. And against that, we are around 990 crores. So one is on account of the translation charges we had incurred a charge. And apart from that, we had certain year-end stuff. We review the entire stock profile at the end of the year, and we are taking a hit of around 25 crore at the end of this quarter. That is the main reason for the increase in the overhead.
And your staff cost is also increased quite drastically. I mean, from if I look into Q1 and Q4, it has been quite high. Your staff cost in Q1 was 490 crore, and in Q4 it is roughly around 580. So, any particular reason for such?
Not comparable, Sujit. As we said very clearly, on July 1st, 2017, we have commissioned Unit 16, and generics came into picture by May 2017. So, the full quarter impact has not been felt, and which has been now felt in Q4. Second, there is a translation expenditure happen in salaries also because of the euro has appreciated quite considerably against the rupee. That is one thing. And apart from that is a normal increment which has been paid also as happened. Annual incentives and other things as happened.
And your capex is also stacked up quite high in Q4. Any special investment this quarter?
I think whatever originally we had talked about, the expenses actually come more in the Q4. So otherwise, the annualized, whatever number we talked about is maintained. These are all pre-planned only. The expenses exactly happened during the last quarter.
I was just thinking, is it on some new plants or some specific project you guys are putting?
Yeah, we are, in fact, one of the conscious things we need to invest on CapEx as we progress. This year also, our CapEx should be around $175 plus $1 million because when the volume growth happens commensurately, we need to ensure that we are capable of servicing those volume growth as well.
So it will be the similar amount in FY19-20 also, or how it is going to pan out?
19-20, it would be premature at this juncture, but actually FY19, I can tell you we expect it to be around 180 million, Sajid.
Thank you, and wish you all the best.
Thanks, Sajid.
Thank you. The next question from the line of Rakesh Shindwala from Rare Enterprises. Please go ahead.
My is that interest cost the effect is that increasing interest is all right.
Sorry, Rakesh, we can't hear you clearly. Can you please speak on the handset mode?
How will the interest cost be affected? But the increase in what kind of interest cost do we anticipate for 18-19?
This year we have this quarter Q4 we ended with an interest cost of 2%. Our interest cost is predominantly foreign currency denominated. So depending upon the Fed rate hike in the interest rate, our interest costs also move accordingly. But it will be slightly below them because we are using other currencies also.
Right. So if the Fed rate goes up by 75 basis points, our interest cost should also go up by 75 basis points.
Yes, sir.
Right?
That's true, sir. It will be slightly below, but nevertheless, it will be of that range.
And how do you expect the inventory and the working capital to increase next year? If you are planning for higher sales, that leads to higher working capital. But if your inventory is going to be normalized and you're carrying excess inventory today, what would be the increase in working capital next year? Suppose your turnover goes up by 15%. How much will your working capital go up?
Sir, we have if you see the balance sheet, we have on an average, the working capital is around 40% of the turnover. If the increase in the turnover by about 15%, as you said, the working capital also will be similar or maybe slightly lower.
Then why do you, suppose I say your EBITDA grows, your profit next year say 2,400, I say 2,400. And your depreciation rate is 3,200. You have $175 million of capital expenditure, right? Why will your debt not go down further? Why it will go down only 100 million?
Sir, it is like this. When the turnover goes up by 15%, even though the working capital to turnover ratio percentage remains the same, but the absolute amount will go up in line with the...
So the sale goes up by 2,000, your working capital goes up by $120 million. So $300 million is your increase in working capital and capital expenditure. Your profit plus depreciation is $600 million. It's about $550 million. So why should your debt go down only by $100 million?
Sir, take the example which you said, if the turnover goes by $200 million and with the working capital ratio at around 40%, so the increase in the working capital may be $80 million.
And 175 is the working capital, so 250.
So 80 million will not happen. It may come down by around 60-70 million. So that will be the incremental working capital required for the in absolute amount.
Right, so 250 million. But even if I take discharge interest, discharge depreciation plus profit after tax, it's about 3,200 crores. So then why should a debt not come down by $250 million?
So we said we will target not less than 100 million. That's what we said. We are not given an absolute amount.
No, sir, but then your target means this math don't add up, Mr. Sipu. Then why you should target only 100 million? Either you're guiding to us wrongly.
Not like that, sir. We have not worked out the fine-tune numbers because, as we said, the year has come only 2 days back and we are working out how it is going to pan out on the new products and other things.
Okay, thank you. Hello?
Yes, sir.
There is some problem in this injectable. I am not able to understand. You have 3 plants. Am I right?
Yes.
4, 12 and 1 more, which is 15.
No, it is actually 4, 12 and 16. I'm not even considering non expenses because it is independent business. Go ahead.
4, 12 and 16. Right? And those plants and all the 3 plants now are EIR clear.
No, so the 4 EIR is received 48-72 hours back and the 12 EIR has been received already few weeks back.
And 16?
16 got inspected only couple of weeks back, sir. There are 3 observations and we have responded only last week. So we will await the regulators review on that.
Right. Now, what is the problem? I mean, are your recalls over or your recalls still continuing? Or do you have to make investments so that these recalls don't happen in future?
Yeah, I would like to clarify, sir. As far as backline is concerned, initially our assumption was that I think we are okay in terms of only recalling couple of wherever batches which had issues. But then when we had evaluated collaboratively with the regulator, it made more sense for us to withdraw the entire residual line when product which is available. So that call we took later. That is the reason you might have seen the same backline recall being filed let's say more than 2 or 3 times. So that
I understand. But has the recalls over now or do you have to make further recalls?
No, so I think please understand the fact that when we run a campaign, sir, even if one batch had an issue, we immediately evaluate in terms of the impact, and based on impact assessment, the calls would be taken. So as of now, I think whatever we had recalled is, in fact, even the recent recall which has been filed is also for the old batches is what we had recalled, Mr. Rakesh.
But you don't have a recall, so therefore as of now, whatever knowledge of recall you have, you recall.
Yes.
And it may occur in future, only the future will tell. Am I right?
That's right. Because please understand the fact that I think these recalls are all normal in the industry, sir, even though for us it is new. So generally, I think when you are in doubt and when it is something which is which makes more sense in terms of not risking any patient safety, immediately we should recall. So that is the norm.
Fair enough, Govind. As you know, today's calls have come are over within the knowledge of what you want to recall.
Yes, sir. On our knowledge, we had recall, sir, whatever we need to recall.
Right. And are there any production problems which have occurred because of the future past recalls which you have to rectify and therefore it's not left full production?
Yeah. So as far as last quarter is concerned, when we had recall, obviously the backline is something which we are doing larger remediation, because of which we are taking more time. I clearly said September, October timeline is when we would come back on the backline. But then when we had issues in terms of certain products, in terms of 16 or in terms of even 12, I think we had gone for some more modifications in terms of enhanced X-ray as well as enhanced inspection. Whenever we are doing those remediation, we would not be producing the product. So that is the reason I think the deferral has also happened.
Thank you. I would request Mr. Jhunjhunwala to come back in queue for follow-up question. We'll move to our next question, which is from the line of Ashi Anand from Allegro Capital Advisors. Please go ahead.
Yes, thanks for the opportunity. Just to understand how Auro would be positioned in the US business, say 2 or 3 years down the line. What we have seen is over the last couple of years, various segments which were limited competition, such as topicals, have seen significantly higher competition. So just trying to understand on our injectable portfolio, how exactly do we look at this 2 or 3 years down the line? Do we see this bit having become commoditized? And how large could segments like nutraceuticals and OTC become from a 2 to 3 year perspective?
I think overall, let's hear from Mr. Reddy. You're there, sir? Okay. As far as I think injectable is concerned, I would put it this way, Ashi. We don't expect it to be commoditized over the period of next at least the foreseeable future of 2 to 3 years or even 3 to 3.5 years or 4 years. We are not expecting it to be commoditized. At the same time, we do expect competition on those particular injectable products beyond that particular timeline. And overall strategy is to ensure that we are able to sweat out in terms of our injectable portfolio. And during the same timeline, amount of investment which we have made in terms of the peptides or the depots or the films, patches and respiratory products, and apart from the other differentiated portfolio which we had invested, would start kicking in terms of that particular timeline, which would take over the growth from then on in terms of driving the growth.
Okay, excellent. And with regards to OTC and nutraceuticals, as in how large do we think this could possibly become?
Concerned, in fact, Mr. Reddy has clearly said, I think this year is expecting a 75% growth compared to last year, and we expect it to be stable as far as the OTC business is concerned, because our strategy, apart from the typical OTC product, is also focused in terms of the switches from the ANDAs to the OTC prescription to the OTC switches, which is not a typical game for most of the OTC players. So to that extent, that particular market would also be less crowded, and we would be able to sustain our growth as our belief as far as the OTC, pharma OTC is concerned. As far as dietary supplement is concerned, in fact, as far as Netral is concerned, last year was more consolidation, but the current year onwards, we clearly see a double-digit growth. And interestingly, we clearly see as far as Netral is concerned, which we have been maintaining from the day one, we still have enough opportunities both domestically in the US as well as the international business. In fact, the international business is being driven well. In fact, we have been exceeding our budget from last year, and we expect the international growth also to continue to see that. I think Netral is also able to grow for a foreseeable future.
Okay, excellent. If you can just get in one last question. On our biosimilar portfolio, it seems like we're likely to be more on the second wave of launches with relation to some of the drugs that we've spoken about. What makes us confident of actually being able to create value here? Because the kind of sense or belief is that in biosimilars to really make money, or you need to be in the first wave. So are we kind of late in this game, and therefore also overall outlook on the space?
So we might be late for a couple of products. We are not late for all the products, and we cannot necessarily claim that all our products would be only in the second wave. In fact, the first product itself, it might be the second wave as far as US is concerned, but it would be in the first wave in the Europe, because we are still expecting the first wave launch in the Europe whenever the particular product can be launched. In fact, the second molecule where I was explaining that there is a possibility of doing the phase 3 in FY20, technically that could be in the first wave of products both in US and Europe. That's again an interesting product. So we cannot be claiming that all our portfolio would get into the second wave is not true, Ashi.
Okay, excellent. Thanks a lot for the answers.
Welcome.
Thank you. The next question is from the line of Karanveer Singh from Systematic Shares. Please go ahead.
Yeah, hi. I'm Ranveer from Systematic. Thanks for taking my question. Just on facilities, Unit 10 and Unit 15 was supposed to go in production in next 4-5 months. Last quarter we had. So what's the status there?
As far as Unit 15 is concerned, it is already exporting. Subbu, the date of commissioning, the month of commissioning, you can clarify, Subbu, on Unit 15?
It is July 2015.
Yeah, July 2015 on, July 2017 onwards, it is exporting.
And that lyophilized unit of Unit 4?
That actually we are awaiting the approval because we have filed a change. So we are waiting for approval in terms of the particular new line is concerned.
Okay. Fine. And just on, I saw other generic players, most of bigger players actually working on rationalizing their product portfolio in US, given that challenges. So just wanted some sense from you whether you are also rationalizing any product pipeline or have rescheduled any R&D on product development?
So what we do is wherever we see that there are certain products we are not competitive, we always go back to improve those products to come back stronger is how we have been working on Ranveer. So at this juncture, we did not see the need for dropping any products from our portfolio, and we rework and we get back on that. That's how we have stuck to that.
Okay, fine. And just the last one, in your presentation where you have mentioned product approvals and filings, I see other formulation, 4 product approved. So what is this others?
So we bought few NDAs, so that's what it is reflecting.
Okay. That's just from that one. Okay, that's it from my side.
Thank you, Ranveer.
Thank you. The next question is from the line of Girish Bakhru from Bank of America Merrill Lynch. Please go ahead.
Hey, just one question on injectables. I mean, earlier you had alluded to growth of 30% given the 10-11 million loss this fiscal, would you be able to cover up that number, or would that be lower?
Girish, our objective is to still grow, and please understand the fact that we would like to ensure that we are having better clarity. When we are having better clarity, we'll be able to comment on it, but definitely our objective is to grow. Girish, that's why we said by next quarter we'll have complete clarity in terms of the growth and how much growth would happen.
And when you had done root cause analysis on Panto, was it specific to Panto, or was it more products were involved in that?
Whenever we take any product, when we do the root cause analysis, we cover the entire products in not only in that side, across also, Girish. That's how we do that in terms of root cause analysis.
Right. And on just on the product side, I mean, besides Ertapenem, which you are expecting a launch anytime soon, approval anytime soon, I mean, are you seeing very big products out there in injectable space, or will be bunch of products accumulating to say good growth in this fiscal?
It will be a bunch of products. I think if you have seen the list of products where we have already filed the ANDA and we are waiting approval, like definitely it's a set of bunch of products is what we are.
Any color on Welsol, Govind?
Welsol, actually, we have filed the update in terms of the query, whatever they had, and as long as we don't have any further query, we should get approval in the next, let's say, 2-3 months is our belief.
Okay. All right. Thanks so much.
You're welcome.
Thank you. The next question is from the line of Nimish Mehta from Research Delta Advisor. Please go ahead.
Yeah, thanks for taking my question. Sir, once again on Unit 4, I'm sorry, I'm not able to fully comprehend. So, on one hand, we have this guideline which we have kind of halted for the moment, and we also have received the EIR. So, is the EIR kind of subject to the guideline? I mean, how do you look at it? Because just like this.
The inspection had happened a few weeks back, a few months back, couple of months, 3-4 months back, or When the inspection happened, there are a few observations on the facility, and we had responded for those observations, and the AR would be reflecting that those observations has been concluded, and thus the AR has been issued. The bagline shifting is our own voluntary decision, because when we had seen certain recalls and we had collaborated with the regulator, and it made more sense for us to recall those products. And since we had a recall on this particular line, we would like to remediate to ensure that whatever we are doing in that line should be sustainable. That's the reason we have taken up the modification, where I clearly said that we would come back on that line by September-October timeline. So these two, are complete. During the inspection, whatever happens, that's where the AR happens. So the bagline, whatever we talked about, is on our own, like when we are shut, and we are remediating, and which will come back by September-October timeline. Is that clear to you?
Okay, so I understand AR is basically not reflecting the bagline, it is more reflecting the...
AR will be for the facility, sir. It would not be talking specific lines, sir.
Okay, fine, no problem. On the ertapenem approval that you mentioned, correct me if I'm wrong, I'm under the impression that we would require a pre-approved inspection for getting this approved. Is that right?
The inspection happened, and the inspection had happened, and we had received the AR, sir.
No, I'm talking about specific to ertapenem, product specific.
I'm talking specific to ertapenem, sir.
It has happened. Okay,
yes, sir.
Okay, great. Fine. And lastly, on dolutegravir, there had been some FDA reports talking about birth effects, side effects. So, do you think this would be serious, or it would help, would kind of impact the overall DPG sales?
So at this juncture, all the sponsors are sitting down and evaluating that particular aspect of it, and they're also working towards addressing that particular risk by mitigating and doing certain other safety studies which they are planning to do. At this juncture, I think for them, the first line as of now, they have taken this as the product, and there are orders which have some which are servicing. I think in terms of the long-term impact, I would still say it is too premature to comment on it one way or other.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to Mr. Krishna Kiran for closing comments.
Thank you all for joining us on the call. If you have any questions unanswered, please feel free to keep in touch with Investor Relations. The transcript of this call will be uploaded on our website, www.aurobindo.com, in due course. Thank you.